recorded version of this. It was held live on Tuesday, January the 9th at 7:30 in the evening. So this is a webinar we run a couple of times a month normally with Aondo. And we also do a weekly webinar looking at the markets, looking at trends and where to trade and all that sort of stuff. But tonight's webinar is all about copying other traders, the idea of building up a team of traders to follow. So I think maybe one comparison is like when you're trading for yourself, you're trying to be the superstar striker on the pitch, and when you're doing sort of copy/social trading, which is what we're talking about this evening, you're trying to be the manager and pick a hopefully decent team of traders whose trades will be followed automatically on your account. So tonight we're going to start right from scratch. I've got a live account that I use for this. It's got real money in, my money. So we'll start right from scratch, how to find good traders, add them into the portfolio, and get them trading. Okay, so that's that. We're not going to spend a lot of time on PowerPoint. We'll be jumping backwards and forwards onto this, but most of tonight is going to be spent on the trading platform. So first of all, the basic principles. We want to identify profitable traders. We want to build a portfolio. Manage risk is really important, because even if someone's got a good track record, I have seen in the last sort of couple of years, I've been doing social trading. I've seen traders go off the boil. So it's important, I think, to manage that risk, and then monitor the positions via the two Aondo trading platforms, WeTrade and TradeHub. I should say, if you're here live as well, you do have a question box at your end of the webinar, so feel free to fire in any questions. Right, so starting off, point number one, we want to identify profitable traders. So what we're going to do, we're going to log into WeTrade, we're going to look at the ranking list, we're going to look at different ways of ranking traders, and then drill down into the data to look at things in a bit more detail. So this is the Aondo homepage. So if you went to aondo.com, this is where you'd end up. And you have sort of two steps from here. You can either go to Aondo Markets, where it's self-directed trading. So, in the normal open an account, put some money in and trade the FTSE or the Euro or gold yourself. Or we can go to social trading and find out about copying other traders. So I'm going to just log on to the social trading account. So click on log on. So log into WeTrade. We'll have a look at TradeHub a bit later. So the account I use for this is this one. So let's log in. Right, so I'm now logged in. So my account, so this is an account with real money. We're not following anybody at the moment, so I'm starting right from scratch, but it's got just over 1,200 quid in this account. So where we start in this, just to explain how this works, if this is new to you, on the Aondo platform, there are traders like me and you who make their track record available to be seen if you want to. Okay, so if you trade with Aondo, you could do this as well. So there are traders who make public their track record, and then you can, if you want, follow them in your social trading account. And what that means is, if they do a trade, let's say they buy the Dow with a 50-point stop loss, and you're following that person, the trade will be done on your account with a 50-point stop loss automatically at a level of risk that you decide. So that's the whole idea behind this. And we start off really by looking at the rankings list. So let me click on here and bring this up, because I think this is always interesting. So what we're looking at here, let me just switch that off for now. So these are all the traders on the Aondo platform who make their track records publicly available. So at the moment, we've got 606 traders to follow. So there we go. So we can pick up to 5 to follow and have their trades automatically mirrored on our account, but we start with 606. So let's have a look at P&L. Let's sort by P&L. So we'll have a play around with a few of these ranking things, but let's sort by P&L first of all. So out of the 606 traders, I've put since incorporation, so since they actually started trading, so whether they started 6 months ago or 18 months ago or 3 years ago, whatever it was, sort their P&L. So the best performer is Peter Lloyd 757, who has made 244% on his, I'm assuming it's a him, on his account. Okay, so that's the return there. The second best one is Raoul Bermuda, made 231%. Smarty Trader, 215%, and so it goes on. So the 10th best performer has made 140%. If we jump forward to page 5, so the 50th best performer is Hercules, who's made 43%. So we have this whole list of traders to choose from and add to our account. Let's just go back to the first page. But I'd suggest that looking at their P&L, is just one place to start from. It's definitely not the be all and end all. Let me give you an example. If you've ever traded, you could have a go at making 100% return in one day by risking all of your account and more. So let's say you did. It doesn't make you a superstar trader. It just makes you an enormous risk taker, where you risk blowing up your account to double it. So I think we need to dig down a little bit deeper into how this P&L has been achieved, in my opinion, to try and find suitable people to follow. But the first filter I apply, look at the names over here on the left-hand side. If you look at Smarty Trader, has got a star next to his or her name. That means they are a popular trader. So lots of people follow Smarty Trader. But what Smarty Trader also has is an R next to the name. So R, this for me is very important. R means that Smarty Trader trades with real money, trades with their own money. Because how Aonda works, if you want to, you can trade using a demo account and have your trades shown that you've done on a demo account. And this is what the top two are doing. So Peter Lloyd and Raoul Bermuda, they don't have an R next to the name. They're not trading with real money. So one of the first filters I use is they have to trade with their own money. If they haven't got confidence in risking their own money, whether it's, I don't know, 2,000 euros, 20,000 euros, 2 million euros, whatever is the right amount of money for them, I don't want to follow them with my real money. So the first filter I put in is, you can see up here, RMT, filter real money traders. So I want to get rid of anybody who isn't trading with real money. Bang, there we go. So straight away, we've lost 400 traders. Okay, so we've now got 198 traders to choose from. Smarty Trader moves to the top because this person is trading with real money, and you can see all these people now all have an R next to the name. And it does make a big difference. If we jump forward to page 5, I'm sure if you've ever traded on a demo and then you make the switch to real money, it's completely different. If you're trading with real money, it's a really different psychology compared to trading with play money. So we're 50 in, we're a quarter of the way down the list, and the percentage showing it's still a good return, made 18% over the period we're looking at, but you can see the P&L does change dramatically. I think we end up with more realistic P&Ls, I think, when we look at real money. So the best performer is Smarty Trader. So, and as I say, P&L isn't the only thing to consider, but it's one place to start from. So Smarty Trader's P&L up 215%. What's really important, as important I would suggest as the P&L, is the drawdown. So this is the thing that shows you, okay, Smarty Trader has more than trebled their account. But along the way, how much of the profit did they give back? Because again, if I promise to treble your account over the next year, or double your account, let's say, over the next year, but along the way end up losing 90% of it before I end the year up double, you'll probably lose confidence, because of the level of volatility. So the drawdown figure is really important. Now, Smarty Traders, that's not too bad at all, really, I suppose, given the level of return we've seen. But you see, if we go down to this one here, Get It, for example, this trader, so nearly made 100% return, but along the way gave back almost 40% of the accounts. Okay, so we can see just how volatile individual traders are. So what we want is, in the ideal world, what we want is somebody with a cracking return but a relatively low level of drawdown. I mean, here's an interesting one, for example. This one comes up quite a bit. So this Janhay person here, so 84% return, but only giving back 13% along the way. So that's a really conservative drawdown level. So I think it's important to have that balance between great returns and not ridiculously scary drawdowns. Someone's just asked, are these stats since they started trading with Aonda? Yes, they are, and you'll see it a bit more detail now when we're going to click in and have a look. The other thing I want to see is really the shape of the chart. My background is technical analysis and charting. Big fan of trend following. So what I want to see, ideally, is a chart like this one, you know, a nice smooth chart that goes up. I don't really want to see a chart like this one here, this get it again, this person here with a 39% drawdown that seems to go up slowly, absolutely fall off a cliff, and then surge up. You know, that's just a level of volatility that that I really don't want. So what I want to see, hopefully, is a nice smooth P&L chart. But let's find out a bit more about Smarty Trader. All right, let's see what this person's how they've actually achieved this level of return. So here we go. We're going to so we've clicked on their name. So now we have a lot more information about this trader. So member since February 2016. So we've got, I suppose, coming up to a couple of years of track record for this one. There's the P&L. So the orange, that's their P&L, going back again to February 2016 in this example. There's the P&L. Down here is the purple dashed line. That's the DAX, the German stock market index. Lots of these people trade the DAX, so as a way of comparison. So over that period, the DAX is up about 50%, whereas Smarty's P&L is up 200%. But straight away, there's a bit of a warning sign for me on this one, and the warning sign is, if you look down here, so there's their P&L since Feb 2016, but Real Money Trader since only June 2017. So this person spent, what's that, 15 months trading without real money before switching to real money in June of 2017. So around about here-ish. So we haven't seen really the same rate of return since then. They've made money, but in reality, we've only got, what, a 6 to 7 month track record of them trading with real money. So that might be a concern for some people. It would be a worry for me. We see things like volatility, relatively low volatility in this one. Winning trades, a high number of winning trades, again, is perversely something of a concern for me, you know, because if somebody has a really high percentage of winning trades, it does make me start to think, oh, do they have a problem taking their losses? You know, do they actually if the market goes against them, do they think, well, actually, I'm going to hang on and hope it comes back? Winning months is a bit more realistic. You know, 7 months out of 10 are winners. I think that's a bit more of a realistic number. Then we have the next important thing, the drawdown figure. We picked up on that. I mean, it's quite high, but then I suppose the returns, although most of it's on demo, have been pretty high as well. Then we have the monthly breakdown. And I think this is a really important one to look at, because we have the headline number, how much return they've made. But if someone trades for 12 months and makes 100%, but they made 90% in November and, you know, 1% the rest of the year per month, again, I think it's a cause for concern. Did they just go crazy in 1 month, risk everything, and ended up lucking out? So what we want to see ideally, you know, is a half decent spread. And you can see last year's number, so 2017 for this one, Smarty Trader, has been skewed by January. So the return for 2017, 47%, but January made 27%. You know, we had much more realistic returns the rest of the year, but that's definitely, that number is being flattered by a cracking January, you know, where they made a lot of money or made a big return. This year so far, up 4.7% for the month. Clearly, we're only, what are we, a week and a half into the start of the year. We have seen a big boost for stock market indices though already this year. But so that's how much the person is up this month. And then the final thing that I like to look at, where's the money been made? You know, there's been, in recent months, there have been some Ayondo traders who've made some cracking returns, and it's been trading the cryptocurrencies, you know, so the likes of Bitcoin and that sort of stuff. And I think it's, for me, it's fine having maybe one or two traders trading that if I'm following them, but I don't want to be following 5 traders all trading cryptocurrencies because of the level of volatility. But we can see with this one, 87% of it has been in the DAX. So 87% of trades have been the German 30 index, the DAX, the German stock market index, a bit on the Bund, a bit on German bonds, and a little bit on silver as well. Okay, so that's a bit of information. Let's just flick back and have a look at someone else. So I've got this full screen. I don't know how to flick back in full screen. Here we go. Let's go back and have a look at maybe number 2, a quick look at number 2's numbers in the ranking. Where are we? P&L. So Barbara, okay, Barbara, I'm assuming it's a she, has been on here a while. So here's Barbara's numbers Again, I think this is a relatively new one. So real money trader, only since September 2017, 99% return last year. But look at October, 40% return in October. I think Barbara was trading the cryptos back then. I think Bitcoin was a big part of that. So again, you can see, very much flattered by a cracking October. Actually, maybe she's not trading Bitcoin. Maybe there's just a little bit of everything. So we can see again what Barbara's numbers look like. Again, pretty big drawdown. If you were following Barbara along the way, you'd have seen a third of your profits given up, probably from this period here, December the 18th, down to there. A big chunk of profits given up, but again has bounced back into this year. So that's Barbara. Let's just flip back onto the PowerPoint and see what we're going to look at next. So once we identify people who we think could be interesting traders, we're going to start following them. So we start following the traders. This puts them into our portfolio, and then before anything happens, we can set the level of risk we want per trader, and then have it all executed on a live account. So let's do that. Let's jump back in. I think I'm already following Barbara. We'll see in a minute, but let's just click back onto what's their name, Smarty Trader, and start following that one. So let's click back on Smarty Trader's details. Here we go. So let's say I think this is an interesting trader to follow. I'd be interested in adding them into my portfolio. So I click on follow, and then here we go. We get sent to another screen. So this is the portfolio of traders I'm following. So there's Smarty Trader, who's just been added in. Then we have Barbara, who is in there already, Giuseppe, Dax Call 3, and Edel Metal, who's actually, let's have a look at Edel while we're talking about traders, because Edel Metal has been on the platform forever, I think. So let's have a look at their track record. Edel Metal, there we go. Really long track record. It came off the boil a bit last year, well, quite a bit last year. But real money trader since May 2016, and since May 2016, so over the last, just in the last couple of years, has made 160% return. But clearly started off really strongly, but it's found it, maybe a little bit difficult, particularly since September. Okay, but that's been someone. So last year, lost money last year, lost 4.6% last year, made 88% the year before, is up 20% nearly this month. What the heck is this person trading? I don't know. Bitcoin, a little bit of Bitcoin in there. There we go. There's Edel Metal. That's quite a long track record. But let's go back to the portfolio. So here's the portfolio. So here are my 5 traders. So at the moment, nothing's happening. So you see this big button down here, execute on live account. So nothing happens until I click that. So at the moment, they're just sitting there in my portfolio. So you can see a few sort of simulations down here in the chart. So if I could go back in time and follow these people 3 months ago and follow their trades, I'd be up, what's that number there? About 58% over the last 3 months. If I could go back 6 months in time and follow their trades, I'd be up, why is it not picking it up? About 135%. Over the last year, I'd have made, oh my God, that seems a bit ridiculous. I think the levels of risk might be off the scales a bit here. 848% if I could go back and follow all their trades. Of course I can't, and there's the usual disclaimer, past performance does not guarantee the future and all of that, but it gives us an idealized version of how it would be if I follow these people. So before we do anything, the first important thing to do is set the level of risk per trader. So how this works is, the easiest way of doing it is just to actually do it. So let's click on settings next to Smarty Trader. So what we do is we basically dial up or dial down how much risk we want allocated to each trader. So for example, let's pretend Smarty Trader has got a £10,000 account, does a trade on the Dow with the stop 50 points away, and does it at a size that means they're risking losing 2% of their capital on one trade. So 2% of 10 grand is 200 quid. If we're following them 1 times, this number here, the trade will be done at the same level of percentage risk on our account. So if I've only got a 2,000 quid account, it won't risk losing 200 quid on the trade for me, because that would be 10% of my account. It will do the trade at a 2% risk on my account as well. But if I'm like mega confident for some reason in Smarty Trader, I can choose to go up to 3 times. So if they're doing a trade where he's risking or she's risking 2% of their capital on their account, if I dial this up to 3, the trade will be done on my account, but at a financial size that I'm risking 6% of my capital. So the stop is in the same place. So if their stop is 50 points away, the trade is done on my account with the stop loss 50 points away. The only difference is the size of the trade. Or if I'm maybe a bit cautious, as I am with Smarty Trader, I can knock this down to a quarter of their size. Let me make it a half. So if Smarty Trader, because I think, well, actually, a lot of the track record has been built up trading on demo money. I think I want to see this person prove themselves a bit longer. So if I knock that down to half, it means if they do a trade risking losing 2% of their capital, the same trade we done on my account, but risking losing 1% of my capital. Okay, so let's click on confirm settings. Let's do that. So that's done, and I can go through all of these people and set, you know, the level of risk that I'm comfortable with for all these people. Okay, 1 times for Barbara. So Giuseppe doing? Let's have a look at Giuseppe's numbers because he was quite good in recent months. Hang on, that's Barbara. Confirm settings. That's DAX call. So let's click on Giuseppe and just see what Giuseppe's numbers look like. Because this one had, oh, he's been doing all right. Oh, it's come out again, come off the boil a little bit, I suppose, over the last 6 weeks or so. And a drawdown again of about a third. Okay, let's jump back. So let's jump back to the portfolio. So I've set my individual levels of risk for all these people, and I'm nearly ready to go. So what happens now is every trade they do from now on in will be followed on my account. So let's click on execute on live account. Here we go. Before, there's a couple of sort of safety screens before anything happens. So open trades detect. Clearly, these are active traders. So the chances are, if they're active traders, they've got trades open already. Yeah. So do I basically, let's say Edel Metal bought the Dow yesterday. It says, okay, Edel Metal's got Dow trades open. Do you want to mimic those trades? And the problem is, if they bought the Dow yesterday and the Dow's up 50 points, the system will put me in wherever the Dow is trading now. Clearly, I'm not going to get in at yesterday's prices. So for me, I've got no interest in mimicking their past trades. What I want to do is follow any new trades. So click on execute portfolio. Let's say it's done. So now what happens is any trades they do in the future, there's my account. Any trades they do in the future will be done on my account. So let's say if in the next 3 minutes, Smarty Trader decides to buy Facebook shares, that trade will be done on my account, and I'll see it appearing here. So let's just flip back to PowerPoint for a sec, because there's a few other bits of risk control. So we've done the trader's individual risk level. So we've done that. We've dialed up or down the level of risk we're comfortable with for those particular individual traders. The next thing we can do is set the loss protection, and I'll also talk about this Aondo negative balance protection. But first of all, set loss protection. What is that? What the loss protection is it's like having a stop loss on your account balance. So this is the loss protection here. So I've got 1,200 quid in this account. But what I can do is I can set a level and say, well, right, if the balance of my account falls to, let's say, £750, close out all open trades and stop following any new trades. So hopefully that makes sense. It is like having a financial stop loss on my account, and I can set it as close to 5% as to where the account is currently. I mean, I would suggest that's a bit close because it would be like 60 quid away from where my account balance is currently. So I'll say, right, 750 quid. If my account balance, including open profits and losses, drops to 750 quid, close out all the trades and don't follow any new ones. So click on save. That's that done. The other thing is with Aondo, they have this negative balance protection. What that means is if you've ever traded spread betting, CFDs, foreign exchange, all of those sort of products, you'll be familiar with the risk warning. You can lose more than your initial deposit, because these are margined markets using leverage. if you put 1,000 quid in your account, you could end up losing more than 1,000 quid if you have a big move against you and you don't have a stop loss on. But Aondo have this negative balance protection thing. And what that means is you can never lose more than the balance in your account. So even if you have a massive gap against you, you'll only lose whatever's in your account. But you can again control this level of risk by putting this loss protection thing on. And then if you change your mind and think, actually, no, I need to review my strategy here, I can click on stop execution. And if I had any open trades, they'd be closed out, assuming the market's open. And if I had any, and it stopped following any new trades. Okay, so that's it. Well, we're up and running now. Anyway, just waiting for someone to do a trade. They might not do a trade this evening. The next thing to look at, so for me, when I'm following people, I just use this page here. I just want to see what trades are running, what's going on, what's my open P&L, blah, 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 blah. But there's also a way we can look at a more detailed view, and that's using Trade Hub. So we're gonna do that now. So what I'm gonna do, we're gonna go into Aondo's sort of all singing, all dancing trading platform. Here we go. So this is, again, if you've traded before, this will be a trading platform you're familiar with. So that's the type of platform you're familiar with. So here we go. So here's my trading platform. So if any trades were getting done, and there are none getting done yet, of course, I'd see any open positions in there. There's my account balance, 1,227 quid. Open P&L is 0 because nothing's been done. So my account value is that. So if I want to, I can see the absolute details of every trade that gets automatically done on my account. And I think it is a bit strange in the beginning. You know, I traded using spread betting and CFDs for about 20 years before starting doing this as well. And it is a bit weird in the beginning when you see trades going through on an account that you're nothing to do with. You just pick someone to follow. But you know, after a while, it's just like managing a portfolio. So in here, you can look at things like account history. So if I go back in time, I'm sure just before the last webinar, I would have closed out some trades. You know, you can see, there we go. So the last time I did this webinar, 12th of December, just before Christmas. So I closed out a load of follow trades that I was following back then. And you can see, because the level of risk is so small, because I dialed the risk right down, look at the size of the trades, sort of 4p a point on the FTSE, a penny a point on Bitcoin, half a p a point on crude oil, what's that? 2.6p a point on the Euro 50. So you can really dial up or dial down the level of risk you want. You know, you won't log on and see you're suddenly £100 a point on the Dow and the market's moving like a nutcase. You know, so it's a very good way, I think, of when you dial that risk right down, of dipping your toe in. If you open an account with Aondo, you can also do it, do a demo, I think, for three weeks to get a feel for how it all works. But once you've got your real account up and running, you can dial the risk down, so you're not going to log on and see you're massively up or massively down. I did the demo, the first 3 weeks I did the demo, I think this was back in May 2016, and it made 15% in 3 weeks. I thought, this is fantastic, but the level of volatility was ridiculous, you know, and I wouldn't want those sort of swings when I was trading with real money. So I got a much more conservative approach with real money. But in here, you can see the normal stuff. You know, what positions you've got running, what positions have been closed, any financing that's been due because you have this idea of leverage, you know, because you're trading on margin, all of that sort of stuff. So it's very clear to see what's going on your account. Okay, so that's Trade Hub, and you get to see the usual important key numbers. You can change the positions yourself as well. So let's say you were logged in and someone had just done a trade on the Dow and put a stop loss 50 points away. If you wanted to, you could go in, edit the position and change the stop loss. You could put the stop loss 30 points away. But if you do change the position, it's then your position. Okay, when the person you're following closes out that trade, it won't be closed out on your account if you've tinkered with it. So, you know, my recommendation, if I'm following people, I'm following them. I've got no interest in trying to change their target or change their stop loss, you know, so the trades will get open and closed automatically as these people I'm following are doing their own thing. Okay, so that's something else we can do, but I basically just let them get on with it. There are financing costs, of course. They tend to be pretty small. Again, if you're trading small like me on this account, you can run account statements all of that sort of thing. But that's really it in a nutshell. I think everyone's clearly, all the traders we're following are all having the night off tonight because no trades have gone through. But I'm sure tomorrow morning, when the German markets open again, and there was a lot of DAX traders in there, they'll start pushing trades through, and there'll be open positions in the account. But it is as straightforward as that. I think the difficult thing, the difficult thing in the first place, is finding what you think are going to be consistently profitable traders. So for me, I'm not that interested in someone who's made 300% over the last 3 months on a complete fluke. I'm ideally looking for people who can sit there and make a sensible rate of return quarter on quarter without too much drama and too much volatility. So if someone's got a 2-year track record but they've made 20% a year, that's fantastic. With a low level of drawdown. You do tend to get sort of both extremes: people who blow up really quickly, and people who just take on ridiculous levels of risk, have a cracking return for 3 or 4 months, and then blow up. So it's trying to find, I think, that happy medium. And then for me, it's just a case of using. I don't use TradeHub so much for follow trading. I just use the sort of the high level view on here, just to see what's going on with the account and log in maybe a couple of times a week, just to make sure nothing's gone ridiculously crazy. And then give people sort of 2 or 3 months to prove that they are consistently profitable. So again, just because someone's had a bad couple of days, I wouldn't necessarily just chop them out and start following somebody else. If I'm looking at a 2-year track record, you need to give them time to smooth out the bumps in their P&L, and that's it. I'll give you a link at the end. I'm going to do it again this year, but I blogged about a live account. It might have been this account actually that I set up and wrote about it for about 4 months, doing updates every sort of few weeks about how it was going. And I did have a trader blow up, a trader who'd done incredibly well for I think 3 or 4 months. And I thought, well, we'll take a bit of a flyer on this one. And they had a week where he just went completely crazy and blew his account up. And I was following him. Clearly it had an impact on my account, but it bounced back pretty quickly. So I'll give you the link to that at the end. So for me, I just log on just to take sort of a high level view as to how things are going. But that's it, I think. It is as simple as that. We're looking for traders we can follow who hopefully deliver consistent returns. We can set a level of risk we're happy with. As an extra risk control, we can put what is in effect a financial stop loss on our account. So if the account balance falls to X, which we specify, then that's fine. The trades will be closed out. And it's easy to monitor it. So someone's saying, what level of drawdown would you be happy with? For me, it's a balance. It's like a risk reward balance. Let's say someone made 20% last year, but their drawdown was 15%. That's not very good, I don't think. But if somebody maybe made 35% last year and their drawdown was 15%ish, maybe like a 2-to-1 ratio, maybe that sort of thing ideally is that the sort of thing I'm looking for. Yeah, because the drawdown thing, again, for me, it's a good question, because it is important. Because if I'm following traders, what I'm doing with this is maybe trying to smooth out some of the day-to-day volatility of trading for yourself. So I don't really want any drama, or too much drama anyway, in the people I'm following. But I blog a bit about that. If you go to my website, that's tradeafter.com. I am going to do this all again this year. That's, if you can hear bottles being emptied in the background, that's not my Christmas drinking. My office is next door to Pizza Express and they're doing their recycling. But if you go to tradeafter.com, you'll see me blogging about this real account a year ago and see how it went. And I'm going to do the same thing again when I get my backside into gear for 2018. I'll start hopefully in the next couple of weeks and do it all again. But you can see the progress there. And obviously Get Away Under, you can read more about this. We'll do this webinar again in a couple of weeks. There'll be this thing has been recorded, so you can watch it again if there's any bits that you missed. But that's it. It's as easy as that. Every Wednesday lunchtime, I should plug the other webinar. So every Wednesday lunchtime, so tomorrow at 12:30, we do the market outlook webinar where we look at maybe where the opportunities are for your own self-directed trading rather than copy trading. So if you follow me on Twitter, you'll see me tweet out the links to that, but that's also on the Under website. But for tonight, we'll wrap things up there. So I hope you've enjoyed it. I think it's a really complementary way. If you trade yourself, it's a complementary way, I think, of having some exposure to the markets. If you fancy having the exposure, but you maybe don't have the time, I think it's another way of doing that. And you really, it is more risky than shoving your money on deposit, obviously. But there are things you can do to dial down the risk and set it at the level that you want it to be. But we'll see. Hopefully this has helped shed some light on it if it's new to you. But we'll wrap things up there. Like I say, have a look at my website for the blog. Any questions, drop me an email. So my email address is david@tradeafter.com. And we'll finish things up there, and I'll let you get on with the rest of your evening. So thanks for coming along, and good luck with your trading this year.